Bitcoin futures contracts on leveraged platforms have become ragingly popular in the last year. We are seeing massive daily volumes really across the board for Bitcoin derivative products. But are Bitcoin futures and leverage trading a healthy part of the crypto economy, allowing for mature price discovery and reducing volatility? Or are they evil, allowing whales in Wall Street to manipulate the markets and to wash out and steal money from retail investors time and time again? Or are leveraged futures simply a new form of online casino? Well, in this video, I'm going to be investigating all of this and trying to break it down for you. Now, Warren Buffett famously once said, derivatives are financial weapons of mass destruction and require careful risk management. Strong words there, Warren. Certainly the careful risk management is an essential part of any kind of trading, but especially when it comes to derivatives. But regardless of your opinion of the Bitcoin derivatives futures markets, it has been a major influencing factor in 2019 and also in 2018 to a large extent. Bitcoin futures and the impact of Bitcoin futures markets, it's only going to grow in relevance in the coming years. Why is this the case? Well, the spot markets, they're just so boring these days, man. Who wants to do spot trading? I mean, come on. Why trade in the spot market when you can do 100x YOLO over on Bybit for Bitcoin? Boom! Don't do that. Please don't do that. And yes, look, I'm just talking about Bitcoin here today, guys, but Ethereum and others, they also have healthy futures markets, particularly in the places like Bybit and BitMEX. We're not talking about the CME or BACT or anything like that, although I suspect Ethereum futures will be coming soon for those. But really, none of them compare to the insane volumes that we see with Bitcoin. The rise in prominence of the leverage platforms like BitMEX and the ensuing flow of money into trading on these platforms has come about as a result of perceived lack of action in the altcoin markets and also the dominance of Bitcoin in the markets overall. And of course, the promise of bigger and more consistent results is a strong lure for traders, because whether the market's going up or the market's going down, BitMEX and Bybit and others, they've got trading options for you. That being said, though, there are certainly a lot of people who strongly criticize the futures markets. The assumption is that everyone loses, which is a crazy assumption to make, and that somehow trading futures is unethical and bad for the crypto markets. Now look, do people lose money trading on Bybit and BitMEX and others? 100% yes, they do. It's true. Do they also lose money trading on spot markets? Absolutely. 100% yes, people lose money. Do people make money trading on leverage platforms like Bybit and BitMEX? 100% yes, they do. Do people make money trading altcoins on the spot markets? Yes, 100% they do. Absolutely. Do people make and lose money buying and holding altcoins? You bet your bottom dollar they do. In fact, people will make and lose money in a whole wide range of scenarios. But for some reason, many people see leverage platforms as a negative for the crypto economy overall. And there is an overwhelming focus on the losers. And for some reason, the winners, the good traders, are vilified or ignored, which is pretty weird to me. I mean, crypto, it's all backwards sometimes. Look, love it or hate it, people are going to trade futures. No one's going to stop this from happening. The important thing is, instead of trying to say, hey, don't go out and trade futures, because people are going to do it anyway, Educate people. Educate people about the risks. Educate people about how to manage risk when trading. Use stop losses, use low margin, all that stuff, because you know what? People are gonna go and do it. And yes, it is risky trading on a leveraged platform like Bybit or BitMEX. That's no secret. But knowledge and education is what is needed, not prohibition, because these futures markets are important. And it's sad that many people that I see attacking the futures markets really seem to have a lot of misconceptions about how they even work, like saying that the futures markets are only used to short Bitcoin and to suppress the market. That's simply not true. Or there's the belief that, affiliates only make money when people are liquidated. That's something I've seen going around recently. That's simply not true as well. Major platforms like Bybit or BitMEX, they work with commissions on trading fees. So when any trade happens, win or lose, a payout is made. So if the market goes up and you're shorting Bitcoin and you get stopped out or liquidated, then I or any other affiliate will receive a percentage based on the trading fee. This is true. Likewise, but almost never mentioned in this equation, funnily enough, is that if you are longing Bitcoin and the market goes up and you make truckloads of money on a successful trade, then any affiliate will again make a small percentage of that trading fee. And as an affiliate, I'll tell you this. I'm an affiliate for Bybit, and I want you to win. I don't want people losing their money. I don't. Trading is a risky endeavor, but I want people to be on the winning side of trades. But yes, leverage does indeed multiply the risk and reward factors. That's the point of leverage trading. Even minor price swings of the underlying asset can result in major gains or substantial losses. Far too many retail investors are trading on platforms like Bybit and BitMEX without knowing what the heck they are doing. Education is how you can make the situation better. And look, it's very telling when you look around and you actually see and understand how retail traders use platforms like Bybit compared to how the big money players use a platform like Bybit or BitMEX. The average Joe, they go in, they're using 20x plus leverage on average. These are according to Bybit's stats. And they're playing with a large percentage of their portfolio, in some cases even 100% of their portfolio, which is crazy. Don't do that. Don't do these things. Versus the whales and the institutional players, they're using 2x leverage or 3x leverage. They're only trading with like 1 or 2% of their entire trading portfolio on any given trade. Seriously, look at what the big guys do and understand how they play the markets, and then understand how the average guy loses in that situation. To make it even worse, not many retail traders even use the basics like stop losses, which is just crazy. You're crazy if you're not using stop losses when you're trading like this. Look, doing anything in crypto involves some degree of risk, and everyone has a different risk profile. The hard truth is that even buying and holding Bitcoin involves some degree of risk, albeit is it a much smaller risk, but there's still a risk. And yes, for most of you watching, just buying and holding Bitcoin, it's the safest and it is the absolute easiest way to get exposure to the crypto market. Buying any altcoin, that's a risky proposition. Certainly riskier than buying and holding Bitcoin. Trading of any variety is risky, even when you understand how to do it, when you know the indicators and you know about trend lines and support and resistance and all this stuff. Leverage trading, it's the riskiest of all. And if you do not know how to trade on the spot markets, then you certainly shouldn't be trading on leverage, or even on the spot markets probably for that matter. But the reality is that people are trading all over the show. You can't stop people. Trading, it's a strong lure to get those sick gains, especially on the margin platforms. Just because a margin platform offers you the option for 100x leverage does not mean that you should be using it. Don't do 100x leverage. That's craziness. You might just burn your money out in your lawn. It might be more fun. So are derivatives evil? No, I'm sorry, but they are not. I know it's a nice narrative to write, but they are simply financial products offering more options for traders. We are so quick to blame the futures markets when the market's going down, but we're very slow to admit their effect when the market is going up. The truth is that most traders on leverage sites, they're all following the same charts, they're following the same indicators. You can look, there's usually a strong bias towards longing or shorting, which market tends to go the opposite way of what the herd is thinking. And yes, of course, there's whale manipulation. Obviously, that's happening. The markets are still very, very small compared to any of the more mature assets out there, which, by the way, are also all manipulated in one way or another. Gold is an $8 trillion market cap, all of crypto combined together. It's only around $200 billion, which is tiny, 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 tiny. So the influence of whales to move the market, it's a very real thing. Likewise, the ability of major players on Wall Street to move the market, also a very real thing. The false assumption is that this is only done to short and to crash the market. But it's also part of pumping the markets. It works both ways. But very specifically, we have seen whales push the price up and then push the price down on the futures markets, particularly by manipulating the price index exchanges. For example, we saw a flash crash on Bitstamp that was initiated by a Bitcoin whale that liquidated longs on BitMEX, since BitMEX uses Bitstamp, Coinbase, and Kraken to make up its price index. This kind of situation has happened a few different times now. And it really speaks of the often low and highly fragmented nature of liquidity across the crypto markets more generally. Even top exchanges rarely make up more than just a few percent of the total Bitcoin spot price volume on any given day. Meaning that large orders can have an extremely significant impact on the spot markets, whereas the derivatives markets have considerably higher volume. The exchanges themselves, of course, operate in, let's call it the gray zone. It's pretty gray, dark, shady areas where we have these unregulated exchanges operating. But they do allow traders from all around the world to have a total free-for-all when it comes to trading these futures products, especially when it comes to Bitcoin futures. They're super popular. Regulation, of course, is lacking for many of these platforms, and compliance issues are very real, and the accusations of insider trading and all that fun stuff, also all worth considering. And a whole host of things can go wrong when trading on these platforms due to lack of regulation for them. Now, to expand a little more on the topic of volume. Today, Binance did around $430 million in Bitcoin spot market volume, which for real volume was probably the largest exchange today, although there are some other exchanges that reported slightly higher numbers. It's kind of harder to believe their authenticity, we can say. And look, $430 million, that's a lot of money. Seriously. But even on Binance, their futures markets way outdid their spot markets, 1.3 billion in Bitcoin futures today. BitMEX did nearly $2.2 billion in volume. Bybit, a little over $1 billion. So the biggest spot exchange did 1/5 of the volume that the biggest futures exchange did. The total 24-hour trading volume for futures is close to $15 billion just for Bitcoin. Now that's spread across about a dozen or so popular futures exchanges versus around 18.5 billion spread across a couple of hundred exchanges in the spot markets. That's also spread across multiple currencies, multiple assets, and of course we must account for loads of potential wash trading within all of that as well. And this is not accounting for the institutional platforms. So far, we've only been talking about exchanges like Binance and Bybit and BitMEX. A very important fact to point out is that all of the crypto native platforms, they require crypto to trade. They accept and they pay out in Bitcoin and other cryptocurrencies. Now this drives demand and requires real exposure to the underlying assets, unlike the following two institutional examples that I have for you. The CME. Oh, the old CME gap. So much attention is given to the damn CME and their frickin' CME gap, and yet, the CME is nothing more than cash-settled paper garbage. The total volume of the last trading session of the CME futures contracts was around $275 million, which is half the size of the Binance spot market, and about an eighth the size of BitMEX and a third the size of Bybit. Just a little player, the CME, and everyone's always talking about it. And then there's Bakkt. Bakkt had long promised and promoted how awesome their physically settled backed Bitcoin futures contracts were going to be. And they're going to continue to offer those particular kinds of contracts. But, even though we see their physically backed contracts gaining more and more volume, Bakkt has decided to release cash-settled Bitcoin futures, which just pours more gasoline onto the paper garbage fire of the Wall Street Bitcoin products. As I've always said, we do not need nor should we trust Wall Street, but they're coming to the party, they're bringing their money, they're bringing their tricks, like it or not. They're not here for the revolution. They are the antithesis of Bitcoin. But they're coming to the party anyway, so what are you going to do? Bakkt's volume the other day hit a new high of $125 million. Will more money flow into Bakkt? Yes, of course it will. We have seen the CME do volumes well in excess of $1 billion a day. And we will see the CME do it many, many more times again. And yes, we will see Bakkt doing that kind of volume, both for their physically settled and their cash settled contracts, I would imagine. But all of that looks pretty damn small when you compare it to the crypto native platforms. Still though, these Wall Street institutional players do continue to be relevant. Both are also launching Bitcoin options in the coming weeks, so there's that to look forward to, I guess. Yay, Bitcoin options. Remember too that these revelations that the CME futures were only approved in order to pop the Bitcoin bubble back in 2017. And of course, when they launched, we had a brutal market downturn, so they're definitely not here to be your friends. These futures contracts from Wall Street are the worst kind of Wall Street garbage. Also, at a regulatory level, we have seen crackdowns on leverage in really quite a few different locales around the world. I mean, obviously in the US, it's only really rich traders who are allowed to go and trade on the CME and Bakkt, so there's that, the whole sophisticated investor thing. Regular traders in the US are banned from the crypto native platforms, which kind of sucks because it keeps regular people from being able to have access to these different financial tools. I know they're saying that they're trying to protect you, but when you realize they popped the bubble on purpose, they're not trying to protect you, they're trying to protect themselves. We see the Japanese FSA asked Bitflyer to reduce the amount of available leverage on its platform. The UK is also banning its citizens from crypto derivatives, at least for average people. Obviously, the guys in suits can continue to play these markets like that. So the question is, would you rather the freedom to trade as you see fit, or would you rather that your government or someone else decide what you can or cannot do with your money? Personally, I always fall on the side of freedom. Do what you want to do with your money. And while futures markets are certainly controversial for some people, I actually see them as an overall good for the crypto economy. I personally like trading futures for Bitcoin. I'm a big fan of it. I love trading over on Bybit. If done with proper risk management strategies, then it can actually be a lot of fun and quite profitable. And of course, very useful tool during big market swings. When we see those giant dip situations or something that's totally overbought, it can be very useful times to have futures markets available. The futures markets also bring in more trading options, really allowing for a much richer trading market overall. Futures markets, the kind like BitMEX and Bybit, also create huge demand for Bitcoin on the spot markets. Seriously, it does. It is a major driver of liquidity in the market, because if you want to go over and trade on Bybit or BitMEX or whatever else, you have to go somewhere and buy Bitcoin first and send it over. It also provides a lot of demand and liquidity for the crypto lending markets. The futures markets are also a healthy part of the price discovery of Bitcoin. And while some people may not like it, the ability to short, in particular the ability to short, is essential for price discovery. While some people may get upset about market shorters, those people actually form an essential part of the crypto economy. The more mature these markets become over time, also the less volatility that we are likely to see. Obviously, we're still in the high volatility stages for Bitcoin, but over time, the futures markets will really help with evening that out. So look, the basic situation is this. Exchanges offer what people want to trade. And you know what people want right now? They want Bitcoin futures contracts. The volume that is flowing into exchanges like Bybit and BitMEX, it really tells you all that you need to know. This is what the market is demanding. So what do you think? Are Bitcoin futures markets evil? Or are they more just like online casinos? Or do you think that they are part of a healthy crypto economy and good for the long-term health and maturity of the markets? Let me know down below. I would love to know your opinion. I know Bitcoin futures can be a controversial topic, especially when you talk about high leverage platforms, but super interested to know what you guys have to think, so please do share your opinions down below. And thank you so much for watching today's video. I know it's a bit of a long one, but you guys are freaking awesome. So if you stuck around to the end of this, kudos to you. You freaking rock. And of course, if you did enjoy it, thumbs up button, massively appreciated. Make sure to subscribe to the channel too if you're new around here. Long live the blockchain, and peace out the next time.